Hello, neighbors, and good morning. Welcome back to the neighborhood. I'm Squealer D, and I am back again. And this time, friends, it is Monday, and we are back in the world of the stock market. And today we are learning what are stock fundamentals, guys. Important question when you are talking about learning the stock market. So, what we are going to do, I'm glad you're here. I am going to read this article by Mr. Ben McClure, reviewed by Thomas J. Catalano. There's Ben McClure. He got the I don't care attitude picture. Look at that. He's a seasoned venture finance advisor with 10 years of experience helping CEOs secure early stage investments. Well, all right, Ben. So stock fundamentals, guys. What is a fundamental? A fundamental is a basic principle of something. So like biology fundamentals are the basic rules that make up biology. So these are the basic rules that make up the stock market. Or just stocks. Stock trading, not the stock market. Bad wording. So what are stock fundamentals, guys? Stock fundamentals are key metrics for a company, such as cash flow and return on assets, which they call ROA. Analysts often perform fundamental analysis to analyze a stock by looking at its fundamentals. This involves looking at any data which is expected to impact the price or perceived value of a stock. So, fundamental analysis involves looking at any data which is expected to impact the price or perceived value of a stock. Some of the fundamentals of stock include cash flow, return on assets, and conservative gearing. Performing fundamental analysis can be challenging because it requires digging through financial statements to know when the stock price is wrong. And if you guys remember, we went over financial statements already, how to look at financial statements and which financial statements to look at. That is also a video that is in my folder marked Stock Market Learning. We will touch on it more, but the basis is already there. Financial statements are in the stock market folder. So, how stock fundamentals work. In the broadest terms, fundamental analysis involves looking at any data which is expected to impact the price or perceived value of a stock. This is, of course, anything aside from the trading patterns of the stock itself. As the name implies, it means getting down to basics. Fundamental analysis focuses on creating a portrait of a company, identifying the fundamental value of its shares, and buying or selling the stock based on that information. Some of the indicators commonly used to assess company fundamentals include cash flow, return on assets, conservative gearing, history of profit retention for funding future growth, the soundness of capital management for the maximization of shareholder earnings and returns. Fundamental, and that all sounds crazy, guys. If you're listening, you're like, whoa, I don't even know what any of those words mean. Conservative gearing, what is that? I don't know, guys. We will learn. Let this be like the basics, the fundamentals of your learning. You listen to these, you listen to me read this. We go over the words a couple times. And by the end of 90 days, we've touched on this so much. We are conservative gearing pros. Whatever that means. I don't even know what it means right now. But by the time we're done with this, we'll have touched on it and focused on it and studied it. And that's what you have to do in learning. It's best to get a general idea first of what we're going to learn, and that's what this reading is. So even if you're confused and you don't know what these words are, let's say you are 12 years old and you are just learning about money the first time. Just listen, and then we will do work. It's like learning multiplication. The first time you see multiplication problems, it's really hard. It's really confusing. The times table chart looks like a crazy chart to remember, but all of us remember the times table chart. Or I take that back. Most of us remember the times table chart once we're adults. But at the beginning in third grade, when they showed us that big table, 12 by 12, it looked hard. That's how this looks. It's really hard. But once we learn the fundamentals like multiplication, division comes easy. And then, as you get into harder math, that basis on multiplication and division really helps you solve all problems. So This is going to help us solve all of our problems when we're buying and selling stocks. But first, we have to hear these words. Before you can understand and truly know what conservative gearing is and use it as a stock fundamental, you have to hear it. And so this is us hearing it. So if you hear it and you get scared and you say, I don't know what that is, you tell your brain, it's okay. I'm hearing it for the first time. I'll hear it for the second time. I might even just hear it for the third time. But I will one day understand conservative gearing because I'm building the fundamentals needed to learn about conservative gearing. So, with that being said, fundamental analysis have a staid approach to analyzing stock performance. They look at a variety of factors that they believe influence a stock performance. These include the industry as a whole, the competition, a company's management structure, its income and revenue, as well as its growth potential. So, example of stock fundamentals. All of the data is public and readily available, generally through a company's financial statements. The goal is to ultimately identify which stocks are priced correctly and incorrectly by the market. To help you visualize it, let's use the following analogy. Think of the stock market as a shopping mall, where stocks are the items for sale in the retail outlets. Their sights are set solely on the products in the mall. Shoppers are dismissed as unreliable emotional herd with no inkling of the real value of the goods for sale. Fundamental analysis moves slowly through the stores seeking the best deals. They're like clearance shoppers, guys. Once the crowd moves on from, say, the personal computers, they will take a closer look at the ones that were passed over. Fundamental analysis may take a stab at determining the scrap value of the PC stripped down to its hard disk, memory cards, monitor, and keyboard. In the stock market, this is akin to calculating the book value or liquidation price of a company. So the scrap value is like what you would get if you just stripped it down and sold all of its parts. So they're looking at the scrap value of a company if you broke it all down and sold all of its parts, or you liquidated the company. These analyses also take a very close look at the quality of the PC. Is it going to last? Will it break down within a year? The fundamental analysis will pore over the specifications, scrutinize the manufacturer's warranty, and consult consumer reports. So like consumer reports that have reviews and how well that item is. Similarly, equity analysis check a company's balance sheet for financial stability. Then the fundamental analysis may try to understand the performance of the PC in terms of, say, processing power, memory, or image resolution. These are like the forecast earnings and dividends identified from a company's income statement. Finally, the fundamental analysis will put together all the data and come up with the intrinsic value, or value independent of the current sell price. If the sell price is less than the calculated intrinsic value, the fundamentalists will not buy the PC. If not, they will either sell the PC they already own or wait for prices to fall before buying more. Special considerations. Performing fundamental analysis can be a lot of hard work, but that is arguably the source of its appeal. By taking the trouble to dig into a company's financial statements and assessing its future prospects, investors can learn enough to know when the price is wrong. These conscientious investors are able to spot the market's mistakes and make themselves money. At the same time, buying companies based on intrinsic long-term value protects investors from the dangers of day-to-day market fluctuations. However, the fact that fundamental analysis shows that a stock is undervalued does not guarantee it will trade at its intrinsic value at any time soon. Things are not so simple. In reality, real share price behavior relentlessly calls into question almost every stock holding, and even the most independently minded investor can start doubting the merits of fundamental analysis. There is no magic formula for figuring out intrinsic value. Important, just because fundamental analysis shows that a stock is undervalued doesn't guarantee it will trade at its intrinsic value near the future. So just because you find a company that's worth, say, $50 a share and is really selling for $10 a share does not mean that stock will ever sell for $50 a share. When the stock market is booming, it's easy for investors to fool themselves into thinking they have a knack for picking winners. But when the market falls and the outlook is uncertain, investors cannot rely on luck. They actually need to know what they're doing. Fundamental analysis is much different from its cousin, technical analysis, where fundamental analysis focuses on measuring a stock's intrinsic value. Technical analysis concentrates solely on the trading price and history of a stock by looking at trading signals and other analytical tools to evaluate the strength or weakness of a stock. Technical analysis believe that a stock's past performance, its price and trading activity, can help determine where it will go in the future. In essence, the theory of technical analysis is rooted in the fact that the movement in price is not random. Instead, it believes that patterns and trends are identifiable and repeat over time. To demonstrate, let's go back to the analogy above. Technical analysis ignore the goods for sale. Instead, they keep an eye on the crowds as a guide for what to buy. So if a technical analysis notices shoppers congregating inside of a computer shop, they will try to buy as many PCs as possible. Better that the growing demand will push PC prices higher. What is this? I never see one of these in there. Investopedia does not provide tax, investment, or financial services and advice. The information is presented without consideration of the investment objectives, risk tolerance, or financial circumstances of any specific investor. It might not be suitable for all investors. Investing involves risk, including the possible loss of principal. Investors should consider engaging a qualified financial professional to determine a suitable investment strategy. I guess that's just their risk management statement. Like, it's not my fault if you lose all your money type of statement. So, the unexpected way millionaires invest in alternatives. It's easy to see why investors want to help protect their portfolios from inflation with real assets like art. Masterworks is an exclusive community. Oh, this is Masterworks. Always trying to sell you something at the end, aren't you, Investopedia? That's okay. That's okay. Get your money, Investopedia. Get your money. You got to pay Ben McClure for writing this article. But we did not need that. So that is stock fundamentals, guys. Stock fundamentals, they look at the company's intrinsic value. What is it worth on the inside? And then technical analysis look at what is the stock doing right now, right? Like on the outside. What are the trends doing? Is it moving up and down? What is that? So that, my friends, is technical, the basics. This is, remember, stock fundamentals. Fundamental analysis versus technical analysis. So we will go over those again, compare them, learn how to use them. Do not fear, my friends. We're going to pop over to Yahoo Finance and check out the news for today. So today I have a wonderful Monday with you, but tomorrow is Tuesday, guys, and we will not be here for money talk. We have a makeup test for the child. She got to go get smart, guys. So let's see what is in the news today. This will probably be a short one, guys. I just wanted to, I know that stock fundamentals and technical analysis, how people decide which stock to buy, is a big part of the stock market. This is not one day, guys. This is not a 3-part series. This is just an introduction to ways that people purchase stocks, items that they use to make their decision. And that is pretty much the biggest part of buying stock, right? The indicators commonly used to assess companies. So we will be looking at this a whole bunch. Don't worry, and you will understand it. So let us look at the news. We won't be here tomorrow, but we will be back on Wednesday, okay? Back on Wednesday, and what we will do is we will learn more about how to actually pick our stocks and make our symbol tickers. We need a watch list, guys, of what we're going to start watching. I've been looking. If you've been looking, let me know in the comments what you think we should watch, because each person has valuable information up here of your own stock groups. Some of us are whittlers, so you understand way different stocks than I would understand. If you're a wood whittler, you might know things that I have never even known. I am interested in computers, so maybe the tech market. I am interested in vehicles, so maybe, vehicle stocks. There's different things that we know about that will help us in this. When you pick your tickers to really watch, to buy and sell. But we'll talk more about that on Wednesday. Today, let us look at the news. Jack Dorsey says Musk should have walked away from Twitter. Oh, people are retracting their endorsement of Elon Musk. What else, guys? Oh, they did an auction on First Republic. So, how are they going to do this First Republic thing? Let's see. So, guys, First Republic is the fourth bank in the United States that is failing. They already put $30 billion. Some banks got together and put $30 billion into First Republic to help it not fail, and is still failing. So now, I wonder if Scott Murdoch is related to Rupert Murdoch. Jamie Dimons, JP Morgan Chase & Co. emerged as the winner of a weekend auction of First Republic Bank in a deal that is meant to draw a line under a recent banking crisis, but comes at the cost of making the largest U.S. bank even bigger. JP Morgan will make a payment of $10.6 billion to the U.S. Federal Deposit Insurance Corp., the FDIC, as part of a deal that will see it take control of most of the assets of San Francisco-based bank. The bank will get access to First Republic's coveted client base made up of the wealthy. It will cost FDIC's deposit insurance fund about $13 billion, according to the regulator's initial estimate. California regulators also seized First Republic and put it into FDIC receivership alongside the sale of its assets, making the third failure of a U.S. major bank in 2 months and the largest since the Washington Mutual in 2008. First Republic was one of the major casualties of the banking crisis triggered in March when depositors fled en masse from some U.S. lenders to institutions such as J.P. Morgan that they thought were safer. Analysis and industry executives said the deal struck over the weekend after the FDIC ran an auction process that saw several other banks bid. Should calm markets, but they added that it came at a cost. The biggest banks were getting stronger, while it was getting harder for smaller banks to do business. This is what always happens, guys. You want to remember what happened when Walmart came into communities? Walmart's came into communities where Ace Tools were and other small plumbing businesses and things like that. And when you sit next to Walmart, they can sell a plunger for half the price that you can sell a plunger because they buy things at a loss and they buy things and sell at a loss just so you will come to their store. They have so much money, Walmart does, that they can afford to buy PlayStations at a loss. So you'll come and buy a PlayStation from them and buy all your other items at Walmart. It's shady business and business practices because they can. If you are a small store and all of your community comes to you, you're not going to have shady business practices because the whole community comes into your store. They know you personally as the owner. And if something is wrong, they will talk to you about it. They know you. You live in the community. Walmart came into our communities and they do not live in the community. You cannot walk into a Walmart and ask to speak to the owner and tell them that you have a problem. That's not reality. So this is what the banks are doing, guys. They're coming into our communities and they're making it harder for small banks to do business, which means it's harder for small businesses to get loans. A big company like JP Morgan have no want. There's nothing in them that wants to give you a loan if you are a small business when they can just give loans to huge businesses. The bigger things get, the more they push out the small people. Pretty soon, small people won't even be able to get a bank account. You will have to get a money account like somewhere at like a Money Tree where you pay exorbitant fees because poor people always get treated like that, guys. They started out and I know a lot of people don't agree in like public assistance and stuff. I don't know why, because government officials get public assistance way more than poor people. These businesses, look at this. They said that the FCI, where was that? They said the FDIC is going to pay $13 billion from the Deposit Insurance Fund. You see that? They're going to pay $13 billion into this bank's mistake. 13 billion, guys, not million. I kept saying million with an M. It's B with a B, billion. This is government assistance, guys. $13 billion in government assistance for one company. Can you imagine if we gave $13 billion of assistance to our people? Doesn't happen, though. So, Dennis Keller, president and CEO of Wall Street reform group Better Markets, said the auction's outcome showed unhealthy consolidation, unfair competition, a dangerous increase in too big to fail banks, all while harming community banks, small business lending, and economic growth. Regulators need a much better game plan for resolving those dangerous banks when they get into trouble. Shares of JP Morgan and some other the largest U.S. banks rose on Monday, while several of those from the next tier fell. So while JP Morgan is raising even more, all the other little banks are failing too, because people are like, if little banks are going to fail, I'm going to get out. I have money in them. You know, rich people are going to get out when they need to get out because they're not going to lose their money. That's how they keep their money. So then you have these little banks and they just fail because everybody pulled out. So First Republic shareholders will be wiped out in the transaction. The bank's shares tumbled 43.3% in pre-market trading on Monday before they were halted. JP Morgan already holds more than 10% of the nation's total bank deposits. Wells Fargo, Mike Mayo, wrote in a research note that JPM's net deposits would increase by 3% as a result of the deal. So they have 13% of the nation's total bank deposits. JP Morgan also entered into a loss share agreement with the FDIC on single-family, residential, and commercial loans it bought, but will not take First Republic Bank's corporate debt or preferred stock. What's a loss share agreement? Why did they only want your... Doesn't that make you guys nervous, guys? You see that JP Morgan entered into a loss share agreement on single family residential and commercial loans, but it wouldn't take any of the corporate debt or preferred stock. Shared loss through a shared loss agreement. So what is it? Okay, that's fine, but what is a loss share agreement? An agreement in a financial transaction in which the resolution authority or the liquidator agrees to share with the acquirer losses on certain types of loans. So it's a share loss. Oh, that means that they're going to share the loss. So the FDIC, not only are they going to pay that $13 billion, but they're in a loss share agreement on single family residential and commercial loans so that JP Morgan doesn't lose when you guys can't pay your single family residential and commercial loans. So the FDIC will also, which, you know, this is the people, guys, that will also pay for part of the loss when single family residential commercial loans when they go bad. Our government invited us and others to step up, and we did, said Jamie Dimon, JP Morgan chairman. Okay, Jamie, but how many other people had an opportunity and an ability to pay $10 billion to take over? Trust me, Squealer D, I would have took over the bank too if I had $10 billion. Let's see how much JP Morgan had to get in 2008. JP Morgan, 2008 bailout. $25 billion they received. Billion. Did they have to pay it back? Did JP Morgan have to pay back the bailout money? I don't know if I believe that. I don't know. It says, they repaid. Look at all these people that got billions of dollars. And then, okay, JP Morgan and Mr. Jamie Dimon. So you repaid your $25 million. Yeah, but how much money did you make off of that $25 million or billion? If someone gives you $25 billion, don't you think you could make a little bit of money off of it before you repay it? If somebody gave me $25 billion, I would make a bunch of money off of it and then give them their $25 billion back too, and have plenty of money to buy the next bank that comes up for sale for $10 billion and receive all of their clients. That's crazy. Global banking has been, I'm going to call it right now. JP Morgan, this guy, Jamie Dimon, they are trying to become a world bank. They want world domination. I mean, what else would you want? That's what they're doing. They're buying every small bank so they could be the world bank. Crazy days we live in, guys. Crazy days. $25 billion to a bank, and we save them, and now they're buying $10 billion banks that are failing. That's crazy, guys. What happens if Amazon, if old Bezos starts buying up every store? Wouldn't that be weird, guys? What if Jeff Bezos bought every single store that went for sale? Because he's got the money to do it. Like, he makes an unhinged amount of money. So what if Jeff Bezos starts buying stores? Like, oh, guys, Kmart's going under. I bought all the Kmarts. Oh, all these stores are, they are buying them all. You guys remember when they bought, what was it, Whole Foods? That's what's happening, guys. One company is buying all the other companies, and then they make all the decisions for us. You can't go to a different company because it's still owned by the same company. It's crazy. It's ludicrous. How can we have competition? How can anybody get rich if one company owns all the gosh darn banks? Like I said, they're going to push poor people out where poor people can't even go to the bank. People don't understand. People do not understand what happens when other people take over the market because they've never seen it happen in their neighborhoods. Have you guys ever had a restaurant get pushed out of a neighborhood? That's what happens. Have you ever had a grocery store get pushed out of a neighborhood? Lots of people have. You know that there's places in America, and I don't know if everybody knows this, that are food deserts. They don't have grocery stores. They got to travel an hour each way just to go to a grocery store, any grocery store. Like, that's unimaginable. What happens if you have no vehicle? What happens if you live in an area where vehicles are too expensive? Some people are very lucky with their vehicles. Their insurance isn't very expensive. Their car payments aren't very expensive. But in some parts of our nation, in the United States, just like violence is higher, loans are higher. Car insurance is higher. You live in a bad neighborhood, your car insurance might be so much you can't even afford it. I know people that pay $500 a month for their car insurance. $500. We used to be able to rent a house for $500. One time, I rented a house. It had, what did it have? 2 bedrooms and plenty of acres. 2 bedrooms, guys. It was a little house. A house, though, not an apartment, a 2-bedroom house for $400 a month. Yeah, $400, guys. This was within the last 12 years. A $400 house. I don't know, man. That's why you have to learn how to use the stock market, because you know who is using the stock market very good? JP Morgan. They saw all this happening and they swooped in to buy it. And that's what we have to know. We have to be smart enough to read the signs so we can swoop in and buy things. And maybe we can't spend $13 or $10 billion. But if we spend $1,000 and we grow that to $2,000 and we grow that to $3,000, we can keep growing and growing and growing. We'll probably never be as big as JP Morgan. But I'm going to be honest with you guys. I don't want to be anything like JP Morgan, even though I share the same last name. I'm good. JP Morgan is, in my opinion, not a very nice business. I agree with the man who said, this Dennis Keller guy, I bet he's mad, Better Group Markets. When big businesses start to take over, just like Walmart, smaller people that are in that group, they get scared because they see things going away, their way of life, like Wall Street, reform group, Better Markets. I don't know what they do, but it might be affected by JP Morgan owning all of the banks. It's going to make banks that are too big to fail. If last time the banks failed and our government was like, we can't have these banks failing. No way can this happen. No. We gave them $700 billion, guys. So how much are we going to have to give JP Morgan and all the rest of the banks this time if they start to fail? Are we going to have to give them our entire American GDP to bring them back out? Why? What about community banks? Why don't we why not give them $13 billion? Why not give small businesses and our local economy $13 billion? Why keep putting money into banks that aren't working? We have banks that pay people $16 an hour, guys. These banks throw around $13 billion like it's nothing, and then they pay their tellers $16 an hour. We have tellers working at banks that can't even afford rent. They literally cannot afford the rent in the neighborhood. They literally cannot afford to live where they work. They have to travel to work because the bank does not pay them enough. But yet we're pulling them out of poverty, but we're not pulling our small people, our small communities out of poverty. But these big banks and small banks, they get pulled up, they get pulled out, they get bailed out. I'm so tired of seeing people talk about welfare. Public assistance, guys, for poor people. Did you know that the public assistance, government assistance for poor people in America, that it brought 23 million poor people out of poverty in 2019. In 2019, public assistance helped 23 million poor people brought them out of the poverty level so that they could survive. 23 million, guys. Do you know how many poor people that JP Morgan, when they gave them $25 billion, they gave $25 billion to JP Morgan in 2008. And it helped nobody. It's happening again, guys. Banks are failing again, and we spent $700 billion on them. They're failing again because banks are built to fail. They're built to get more money, and more money, and more money, and more money, and eat each other up, because that's what the banks are. The banks take so much in fees from their people that lots of people go broke from having a bank. A literal bank causes them to go broke. The fees cause them to go broke because they're not having their money work for them while the money is in the bank. All the bank is doing is taking fees and not helping them. Do you think that there's somebody at the bank that helps them? If you have $1 million in the bank, do you think somebody at that bank comes to you and says, sir, all the fees getting taken out of your money is not good. Why don't you invest it? They don't tell you that. They don't care about you, and they don't care about your money. They care about taking your money. So we sit and complain about public assistance, guys. People that get free money from welfare. But we have all these banks that got $700 billion in welfare, and they don't help anybody. They're not out here in the streets helping people. They're not given to poor people. This is not public assistance. This is bank assistance, and nobody's complaining about it. Nobody. Nobody said anything about any of the money that they've done, that they've given to these people to bail them out. Nobody on my Facebook timeline whines and complains about the banks or about high profile money given away to people, to corporations. How many corporations and senators and different politicians got PPP loans during the pandemic, guys? That's free money. That's called welfare, guys. Welfare for the rich. And it outshadows and surpasses any amount of public assistance we could give to the poor, to the actual people that need it, to pull them out of poverty, to actually do something for our country, to pull poor children out of poverty and help them have a chance at the future. We complain, guys. I got people on my Facebook page saying don't give welfare to people that are lazy. But you got JP Morgan and Mr. Diamond here talking about he need $25 billion. And we just fork it over like, well, the banks are too big to fail, guys. We need money. We need banks. We got to do this. No, we don't. We need to take care of our people, but instead we complain about it. Like, that blows my mind that we can spend this much money on a bank that's already almost failed before. Banks are failing again, and we just keep pumping money into them. But we sit here and complain about people that get free money because they are down on their luck, or they're disabled, or maybe they had a kid they shouldn't have had. Maybe they did something bad, like did drugs and got addicted, right? So what did these guys do? You guys remember what SVB did? They put out dangerous loans, guys. They failed. The bank failed. They made dangerous business decisions, and they failed. And still we gave them billions of dollars and billions. But a woman who has a child, or a man who has a child that maybe they shouldn't have had, we complain about giving them $400 a year. Do you guys know that welfare for one child is at max $500 a month? So if you have a child, you live in the United States, you're probably going to get one child, around $500 a month. Yeah, around $500 a month. That's what they're going to give you to help you and your child. $500. You know what $500 is in a year? $6,000. So you know what? You could do that your whole life. Let's say you go 40 years. Okay? You do $6,000. You get your big $6,000 every year. And you do that somehow. Let's say you have 15 kids. And you space them out so that you could keep getting welfare, right? You get your little $500 welfare every month and your $400 food stamps. And even if you did that for 40 freaking years, 40 years if you did that, you still would get less than $300,000, guys. It'd be $240,000 that you would get free money. Even if you did it your whole life. And who do you know that can get welfare for their whole life? Maybe they can get welfare for their children and they get Social Security, and that's if they're retarded. Something's wrong with them. You have to have something wrong with you to get Social Security and welfare your whole life. Like, something was obviously wrong with you. You had a mental problem. You had a health problem. You had, who knows? Who knows what your problem was, but you had a problem that kept you on welfare your whole life. You couldn't get off of it. And then, even if, like I said, if it's a mental problem. So we shouldn't pay $250,000 for a woman with a mental problem who has children to help her children not live in poverty and not be negative to society, but we can gladly give billions to banks. Why on my Facebook am I seeing these people complain about thousands, $6,000 a year when we're handing out billions to banks? Because people don't understand money. And that is why you're here watching this, because you want to understand money. Nobody is going to hand you money. You have to learn it. You have to learn it, guys. If you don't know, they'll do that to you. They'll have you thinking that your enemy is poor people. They will have you thinking that our world is destroyed off of poor people. Perhaps the poor people are here, guys, and they're increasing because our world is already destroyed. We have so much negativity. Of course, we have drug abusers. We have so much poverty in this country. Of course, we have children that don't want to learn and that don't want to be a positive part of society. If you grow people in a negative environment, how can you expect them to just become a positive part of the environment? We can't. And we're blaming the wrong people. We take away public programs that help these children become good people, but we don't take away bank programs. How many school programs have we taken away in the last, since we were children? When I was a child, every school had sports. When I was a child, some schools charged you for the sports, but every school had sports. Not every school has sports. Not every school has art, guys. Not every school has music. We are taking programs away from children that make them normal, adjusted people when they get older. And we're giving it to these banks so that we can have more and more and more money, thinking that's what's good. That's not what's good, guys. We just made JP Morgan a king. Well, they were already kings. We made them a whatever's above a king. Let's look at, what's their ticker, JP Morgan's ticker? Missed it. JPM. Okie dokie. So it's up 2.28% today, guys, because it took over another bank. Hey, you guys remember in 2020 when everything was up? Everything was up in 2020, right? I say that all the time. Like, oh, that was up. That was up. Guess what wasn't up? JP Morgan. Look, since the pandemic petered out, that pandemic hit and JP Morgan's said all the way down. That was the pandemic. 315. Weird. They dipped before the pandemic announced. That's because, you guys see this big dip right here? Everything was going fine in February, right? Look, they were at $136, so they were well above the moving average, guys. This is the average. In January, in all these months, they were at 133, 138, 138. Right before we learned about the pandemic, everybody sold their stuff, guys. Why? I'll tell you why. That's because the rich people heard about the pandemic first, guys, before us. I was watching the pandemic way back here, guys. I was watching it in China in December. I was watching people die and hide it in December. By the time it hit us in March, look at this. By March 2nd, March 24th, people had already sold. By the 9th, it was our stay home was announced on the 16th, and it had already dropped by then, all the way down to the moving average of $103. So before the pandemic even hit, the stock market, or JPM, lost 135 all the way down to 103. So it dropped $30 in the span of from the 17th until the 2nd, it dropped $30, guys, right before the pandemic. That is because our politicians, guys, they knew that this was coming, and they sold stocks because of it. You know what they invested heavily in? They sold their JP Morgan stocks because they weren't sure what banks were going to do. But you want to know what they bought heavily in? Anything that had to do with the pandemic. Healthcare. And that is why the stock market works for rich people and not for poor people. Because poor people didn't hear about this. Rich people heard about this. They went to meetings and they heard about China, just like I heard about China in December way over here. They went to the meetings all during these months. They found out about China. They found out it was definitely coming here because it was airborne. Like they tried to lie to us at the beginning that it wasn't airborne. It was airborne. And then it dropped down. And you can see it. You can see it happen before we locked down, guys. When we locked down in America, it was right here. It had already hit $83 by the time we locked down. Very curious. Very curious. But now, it's up. It's up. It's headed way back up. JP Morgan, guys. That is banking in America. Big banks. All right, I think that's it for today, guys. We are going to call that a day. I can't handle much more of this JP Morgan news. And I will see you guys. Like I said, remember Wednesday, tomorrow I got things to do. But we will be back Wednesday. I'm thinking Wednesday we're going to do a review. So it will probably be very helpful for you to tune in on Wednesday. You can catch it later in the day if this is too early. You can always watch them later in my folder called Stock Market Learning. So I will see you guys next time. Be there or be square. Have a wonderful day. Bye now.